What's the difference between accounts receivable or payable and notes receivable or notes payable? We already explained the difference between AR and AP in a separate video. Now let us contrast the two against notes receivable or notes payable. So AR/AP versus NR or NP. As a quick review, AR is collectibles or mga sisingilin pa, and AP is yet to be paid or settled, mga babayaran pa lang. Now, NR, on the other hand, is almost the same as AR, and NP is almost similar to AP. What's the difference then? The word notes. Notes as in nota? Yung ano, oo, ulagi, nota. Hindi ako na ng nota. Admin. Bata pa kayo. Wala. Going back, notes here means that the receivable or the payable comes with a promissory note. Giatay. Oy, kanarte ay. That one stating, I promise to pay blah blah blah. Yan yun. So, what's the significance? This promissory note usually bears interest, although there are non-interest-bearing notes. If the problem is silent, meaning it doesn't say whether it's interest-bearing or not, it's usually assumed to be interest-bearing, and this will be confirmed with the given interest rate in the problem. Computation for interest will be discussed in a separate video. To summarize, AR or AP, no interest, just plain receivable or payable. NR or NP comes with promissory notes and usually bears interest. The point here is to always mind not only the receivable or payable part, but also the interest. Depending on the problem, you might be asked to just compute and or provide the journal entry. For short questions and requests, comment na yan in capital letters para kita agad. Oops, wag naman buong problem ha. Sa paid tutorial session po natin yan ina-assist. We all have bills to pay. Example, rendered pest control service for 50,000 on credit. The journal entry will be accounts receivable debit 50,000, credit service revenue or service income, they're just the same, 50,000. Then, if we have this example, receive 11% notes amounting to 50,000 from customer for rendered pest control service, entry will be, observe the difference, debit notes receivable 50,000, credit service revenue or service income 50,000. So to emphasize, if we are the one earning without receiving payment from customer, we use the receivable account. AR if it's for goods or services that we are mainly providing, and NR also for goods and services, only that there's promissory note involved. Another example, bought medical equipment worth 100,000 on account. Entry will look like this. Debit medical debit medical equipment 100,000, credit accounts payable 100,000. And if there's a promise like this, issued a promissory note for medical equipment bought for 100,000 at 9% interest per annum. Now the entry will be debit medical equipment 100,000, credit notes payable 100,000. To emphasize, if you are the one buying without paying yet, we use the payable account. AP if it's for goods and services without interest, and NP also for goods and services, only that there's a promissory note involved which usually bears interest. Now, journalizing for the interest part merits its own separate video, so better watch out for that in this channel. For now, let's just stick to the basic difference.